Is Meta breaking out or breaking down? Hey there, I'm Dave Keller with Market Misbehavior. Today we're going to talk about one of the leading growth names, one of the biggest names in the communication services sector, and certainly one of the biggest names in the S&P 500, Meta Platforms. We're going to talk about, two different potential technical setups we could be observing here. We may be experiencing a cup and handle pattern, which would actually be quite bullish and would suggest that Meta is actually going to break much further. Or this could be a big double top pattern, which would actually be quite bearish and actually suggest that Meta is going to go a lot lower. So how can we tell which one's actually going to play out? Today, we're going to talk about those two different classic chart patterns. We'll talk about some of the tools and techniques we can use today to anticipate or maybe better assess the probabilities about which path may actually play out. Before we get to those chart patterns and their implications for Meta, there's one more thing I wanted to tell you about. I spent many years earlier in my career working for large financial institutions. And when I left the institutional world, I remember thinking, what am I going to do to replace these big, expensive, but powerful institutional investing platforms that I've had access to this whole time? There is an option now for individual investors and financial advisors, and it's called Koifin. Koifin really combines some of those great capabilities of the big, expensive institutional platforms, along with some capabilities really optimized for financial advisors and high net worth individuals, and puts it in a very low cost, underpriced package on a web-based platform compared to the possibilities that you can achieve by using said platform. One of the features I love to use on Koifin, they're the ETF holdings. You can take an ETF, you can, like the QQQ, you can look at the biggest weightings, you can look at weightings by sector, you can run some basic attribution analysis. So for ETFs that you own or that you're considering owning, doing the due diligence of really understanding the exposures you're going to get is super important and super powerful for your portfolio. If you go to marketmisbehavior.com/Koifin, you can get 10% off any new membership. I hope you will check it out, and I hope you will find it as meaningful and powerful and impactful as I have found myself. Now let's get back to the charts. All right, so here we're looking at the chart of Meta. As you can see, I don't know about you, but for me, if I take a step back from my monitor and just take a quick look at the chart, certainly looks like what we'd call a double top pattern, right? And a double top pattern is basically you have a clear level of resistance, we pull back, and then we retest that same level. So you literally draw a horizontal line from the first resistance. It actually lines up pretty well with the second point. And as we pull back, that is a classic pattern, which is, basically suggests that there's an exhaustion of buyers, right? There's enough buying power to get us to a certain point, and then we pull back. And then on that second test, we don't get any further. And that sort of implies there's a ceiling in the market, usually better off playing the short side in that type of scenario. But there's also a pattern called a cup and handle pattern. This is actually a pattern that was popularized by William O'Neill, creator of Investors Business Daily. And the cup and handle, or what he actually called the cup with handle pattern, so where you have a big rounded bottoming pattern. So ideally, it'll be a little more of a kind of a curvature instead of more of a V or W shaped pattern like we see. Ideal situation would be literally looking more like a cup of coffee. And then you have this shorter pullback called the handle. And then if you break above what's called the rim of the cup or the neckline, that would be a very bullish sign, a cup with handle pattern. So at this point, it's really unclear which of those two patterns is going to play out, right? And to be honest with you, it all means what happens with price from this point forward, right? If we continue to sell off, at some point we have to declare that's a double top pattern because there's no real handle forming. We start to break down. On the other hand, a cup and handle pattern would actually be validated if and only if we break above what's called the rim of the cup. So you probably draw a horizontal line around 735 to 740. That was the high in February. That would line up very well with the high from late June. So if and only if we start to get a break back above 735 to 750, then it's not a cup and handle pattern, right? That's actually part of the pattern, is that break above the neckline. So these are two very different potential patterns that are being created here. A double top pattern, which would be quite bearish, suggesting essentially a retest of the April low. A cup and handle pattern would actually be quite bullish and would suggest much further upside if Meta is able to get above 750. So what tools and techniques can we look at today that will help us validate which of those two very different outcomes is more likely to play out? I boil it down to three particular steps: trend, momentum, and volume. And you can consider what information you're gathering every day and think of it in terms of those three lenses. The trend, right? What is the price actually doing? Is it breaking down through particular support levels? Is it giving you some sense that there's a new direction to this price, right? And so trend is basically, can we define the movements, and does it happen? Does it hit enough of a point that we have to determine that one of those paths is now playing out? Second would be momentum. What can we learn by looking at price momentum? We're going to use an indicator called RSI, the Relative Strength Index. Can that help us validate or maybe identify, some of the internals behind the trend? Right, momentum readings are basically not just looking at where the price is going. That's trend. Momentum is how it actually gets from point A to point B. So can we get some sort of information about the way that the stock is trading as it plays out through these two potential scenarios? Number three would be volume. What can we learn by looking at the volume characteristics? Are we seeing signs of accumulation or signs of distribution? And can that help us maybe qualify which of those scenarios we see as more likely? Let's go through each of those one by one, and I'll show you some of the specific levels and patterns I would be looking for. So to talk about this potential double top pattern, I'm going to zoom in just a little bit here. So we're looking at the last 1 year. And just to clarify, the double top pattern that we're potentially looking at is the February peak, which is really around 740. The retest of that peak just above 740 here in late June, and now we've pulled back a little bit. So a double top pattern, a classic double top pattern, would basically just keep selling off from here, right? We've now confirmed the second peak, so then we would start to roll over. A cup and handle pattern, as I mentioned, you'd soon basically be able to form a handle, which would then line up with this cup, and then a break above 740 would confirm the uptrend. So from a trend perspective, that 740 level is very important on the upside, because if and when Meta would break above 740, it's not a double top anymore, right? Because we've now had more than one test of that level. It's something different. If we break above 740, that resistance is now violated to the upside. It's a bullish chart. So 740, a key level to watch on the upside. But what about on the downside? I'm going to add another moving average, the 21-day exponential moving average. I've actually found quite helpful. I'm going to go back to that 1 year time frame. So the moving averages I'm using here are the 21-day exponential moving average, or EMA, the 50-day simple moving average, and the 200-day simple moving average. Anytime we've had a pretty good run in a stock, and a lot of charts right about now, particularly growth names like NVIDIA and others, have had incredible runs to the upside in May, June, and July. So the 21-day exponential moving average can be a really good initial signal that maybe that trend is starting to change, right? So as long as the price holds above an ascending 21-day EMA, conditions are still pretty good. That's why a chart like NVIDIA, to digress for a moment, that's why a chart like NVIDIA looks so good, right? The price is above the 21-day EMA. The 21-day is above the 50-day. The 50-day is above the 200-day. This is a configuration that I call moving averages in the proper order. Price above the 21-day EMA, 21-day EMA above the 50-day moving average, 50-day above the 200-day. Everything's lining up well. So on the chart of Meta, we're looking for if and when that no longer starts to be, because back here at the end of June, we had a very similar pattern to NVIDIA, right? Price above the 21-day EMA, 21-day above the 50-day, 50-day above the 200-day, all of them are sloping higher. Look at what's happened this week. Meta has actually broken below the 21-day EMA. The 21-day EMA is now starting to slope downwards. Now we're still above the 50-day and still above the 200-day, and those are still sloping in the right direction, but that initial warning sign has started to trigger. So in my mind, this starts to tell us maybe a cup and handle not materializing, but a handle can actually go a little bit more deep than that, and that's actually pretty common. It would be fairly reasonable, given the normal configuration, the normal framework of this type of pattern, to go down to like the 50-day moving average. That's a reasonable point where I would say that's probably where the lower end of a handle would probably set up. So here we have the 50-day moving average right around 680. If we look to the left on that chart, we can see that that lines up with the swing lows in June, here in mid-June and late June, all around that 680 level. So here's what we have called a confluence of support, multiple indicators coalescing at one particular price point. So in my opinion, 680 is the important level to watch on the downside on this tactical time frame, right? If we break below 680, that tells me more likely we're not seeing a cup and handle pattern. We're more likely seeing a double top that is now confirmed because we're breaking down through multiple moving averages. So if you think about it, with this first sort of way that we sort of validate these two patterns or identify which is more likely is by looking at price action, right? Looking at trend. And I would say for me, I'm setting a price alert for if and when Meta breaks above 740. For me, that would confirm a cup with handle pattern with a very bullish outlook. If, however, Meta breaks down below 680, that would mean we're below the 21-day EMA, we're below the 50-day moving average, we're below the recent swing lows in June, and that would mean the chart is now showing lower lows and lower highs. That's a downtrend. I think that would confirm the double top pattern and suggest further deterioration, most likely the 200-day moving average currently sitting around 620. So trend, I think it's all about breakouts and breakdowns, looking at those couple key levels, which could help us just confirm which of those patterns we may be observing. The second item is to look at momentum. We can stick with the same chart, and we're looking at the indicator called RSI, the Relative Strength Index. This is an indicator designed by Wells Wilder in the 1970s, really as a way to trade commodities. But we now, in the modern era, apply this indicator to still commodities, currencies, bonds, interest rates, stocks, ETFs for sure. So looking at where we're at relative to these levels of momentum can help us understand just the way that the price is moving, right? We talked about key price levels by defining the trend. Now we're actually looking at how the price is going from point A to point B. So if the RSI is above 70, that means we're overextended to the upside, what we call overbought. We've moved too high too quickly. You can see that happened there in early June and in late June. When the RSI is oversold or below 30, that means the price has gone too low too quick, overextended to the downside. We most likely start to pop higher. We can also look for divergences. We can look at when price is going in one way and momentum is going somewhere else. Now, we don't have much of a divergence, but we do have a slight one here in the month of June, with price making higher highs from early June to late June. And you can see the RSI is sort of slightly gently sloping lower. Just this week, as we're breaking below the 21-day EMA, the RSI is just slightly breaking below 50. So we're starting to be in the lower half of that range. Look like back here, you can see often in a bullish phase, the RSI will pull back to around 40 or 50, but never much lower or rarely much lower in a bullish trend. And that implies that these pullbacks with the RSI remaining above 40, that's a pretty constructive pattern. If, however, the price sells off and the RSI does not hold the 40 level, that tells us we're probably in a different phase. We're more in a bearish phase. And then you can see in March and April, the RSI remains mostly below 50 level, telling us we're in a downtrend. So right now, the RSI is kind of right at that point where if this is a buyable dip and the price is going to break higher, that would be the cup and handle scenario. We're right about that point where we should be finding support. So similar to looking for the price relative to the 50-day, I'd also be looking to see if the RSI can hold 40 here in the month of July. And if so, maybe we're setting up for the next bounce higher and a break above 740. If, however, the RSI does not hold the 40 level, all of a sudden it looks more like early March, where a pullback actually just kept going and we continued to break further and further to the downside. So we can use RSI as a measure of momentum, sort of qualifying the price action we're seeing in the chart above and just identifying if there are key breakdowns in momentum, which would suggest sellers are starting to really take control. The final piece is volume, and we do have to look at a different chart. Here we're looking at the same stock, Meta. We're looking at the last year, and I have two indicators which are both based on volume. Both of these indicators, by the way, were created by Mark Chaikin, who's a prominent technical analyst, one of the living legends, I would say, in our small community in the financial industry. I've gotten to know Mark over the years. He's a fantastic advocate for technical analysis, for quantitative methods using charting and technical analysis tools. And these were two indicators he designed early in his career as a way to improve on the existing indicators that were based on volume. Looking at the daily volume reading is good if you have nothing else, but really doesn't help you understand trends in volume. It's really looking at just day-to-day movements and volume readings. Accumulation distribution looks at a running total of those volume readings, but weighted based on where the price closes relative to a high-low range over a period of time. The Chaikin money flow looks at a certain look-back period and turns daily volume readings into an oscillator. So basically, volume is bullish if the accumulation distribution line is trending higher. Chaikin money flow is bullish if it's above zero. Accumulation distribution is bearish if it breaks down and starts to trend lower. Chaikin money flow is bearish if it's below zero, basically telling you that there's distribution. So if you look at what happened here in May into about mid-June, the accumulation distribution line trending higher, the Chaikin money flow remaining above zero. You can see all of these daily volume readings. You can see on average the days in black kind of on average a little higher than the days in red. The days in black are up closes. The days in red are down closes. And that's not exactly the calculation, but it shows you how over this period you see kind of more up volume than down volume, and that causes the accumulation distribution to be positive. That causes the Chaikin money flow to be positive as well. But look how from mid-June to now mid-July, both of those have started to change. The accumulation distribution line very, very close to breaking to a new monthly low, which would indicate a period of distribution. The Chaikin money flow actually flipped negative the third week in June, did pop slightly higher as we retested the previous high, but in the month of July, the Chaikin money flow has been negative for the entire month so far, and that is telling us we're in a period of distribution. So this third factor we're looking at is volume. We're using, instead of just looking at the daily volume readings, we're looking at two technical indicators derived from those daily volume readings, but adjusted and adapted based on the price action relative to those daily volume readings. The accumulation distribution very close to breaking down. That would be a bearish sign. The Chaikin money flow already negative, telling us we're in a period of distribution. So the negative volume that we're observing from May to June to July tells me that a double top more likely than a cup and handle pattern. What would change the volume picture? Accumulation distribution breaking out, breaking to new highs above that June peak. Chaikin money flow going back above zero, telling us we're starting to see some accumulation signs looking at the price and volume relationships every day. So there you go. Those are the three ways that I would validate which of these two scenarios is going to play out. The double top pattern, which would be very bearish. The cup and handle pattern would be quite bullish. By digging a little deeper into analysis of price trend, we can identify key levels that we're watching. We highlighted some of those levels earlier in the video. And I would encourage you, by the way, I have alerts set for a breakout above 740 on Meta, for a breakdown below 680 on Meta. And I think either one of those scenarios would help us validate which of those patterns is more likely to play out. Second is to look at momentum. Keep a watchful eye on the RSI indicator. See if we are able to hold 40 during this pullback phase, because if not, all of a sudden it starts to look more like distribution, just as we observed earlier this year in March, coming off of that February peak. Finally, we can use volume-based indicators like Chaikin money flow and accumulation distribution to determine if there are any signs of accumulation. And for now, at least for now in the month of July, Meta is showing way more signs of distribution than accumulation. What's your outlook on Meta over the next 4 to 6 weeks? Don't forget to drop a comment below and let me know. What indicators did I not talk about that you think are most important to help you make that crucial call on the future movements in Meta? Make sure you let me know that as well. That'll do it for today. For Market Misbehavior, I'm Dave Keller. Don't forget to watch my daily market recap show called Chart This with Dave Keller. We live stream every trading day at 5 p.m. Eastern, 2 p.m. Pacific here on my YouTube channel, also on other social media platforms. I'm Dave Keller reminding you, it's always a good time to own good charts.